traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York on Friday. Happy Aloha Friday, as we say on the islands. 10th day of July, 2015, and this is the daily report for gold and silver, our weekend review, and our final edition in which we combine trending markets and the gold forecast together. Monday, they will go back to two separate shows. Interesting week in that we started the week with fireworks not only in the United States celebrating Independence Day and the 4th of July, but some chaos going on over in Greece as they were unable to resolve the current Greek debt crisis and come to any sort of an agreement on the austerity measures which had been presented to them. We had the week of extreme volatility, and it seems as though we have seen a conclusion of that because the equities markets had a tremendous rally today, not only in the United States, but a tremendous rally in Europe. We also have pretty much the belief that there is a resolution and acceptance of austerity measures. In fact, they'll be voting on that in about 40 minutes in Greece, and then in Brussels, assuming that that's passed, we'll see that get passed in Brussels. And then, at least for the moment, Greece will go off the front burners, kind of into the back burners to simmer as we move China really still on the front burners, but move the heat down. We'll talk about that as well as the precious metals all on today's daily report. So traders, I first want to look at gold. Gold closing up nominally on the day in terms of where it closed up about $3.40 at $62.60. That is our current COMEX gold. When we take a look at our spot market, it trades a little bit after the initial close of COMEX for the weekend. That currently up around $4 at $1163.48. It has had a low of $57.62, a high of $65.42. Now, when we actually look at gold in terms of the week itself, it's a slightly different story. And to really illustrate that, I've gone ahead and I pulled up a weekly chart. Now, this weekly chart hasn't seemed to update on the day. As I said, it's trading at around 63, not 57. But even with that in mind, when we consider that this market opened at the beginning of the week at 1172, and we're closing at about 63, we are still off on the week, although we are up on the day. Now, in terms of the precious metals, one of the most dynamic moves that we've seen over this last couple of weeks, not just this week, and we noted it a little bit last week, and that's been silver. Silver, which has been under one, extreme pressure in the market, but two, and really noteworthy, is that disconnect between the way gold and silver tend to move in tandem, meaning both closing up or both closing down lower on any given trading day. What we have seen is a really move away in which they're acting quite separately. Now, we had silver have a really strong move today, closing up about 18 cents on the day, which puts it over a 1% gain just today alone. When we look at first our daily charts, you can absolutely see that these last couple of days we've seen this market move from really a base at about 15 to where it's trading at now, which is 15.54 on the day. Also very interesting is looking at our weekly chart. Let me go ahead and blow this up so you can see what we're looking at. We certainly have, in terms of a candlestick identifiable pattern type and candle type, is a hammer. Now, a hammer is a trading cycle, in this case a week, but a trading cycle in which you have a very, very small bodied candle. And we certainly get that today. That's the first criteria. Second criteria is that when you look at the tail itself, the tail needs to be roughly 3 times the length of the body size, and we're certainly getting that this week. Here you've got almost it's about 4 times the size of the body length. And then the last criteria that you look at on identifying a hammer is it really needs to occur after a defined downtrend. No better example can be made than on this weekly chart, in which you see this market coming from roughly at about 1760, 1765 in that area, and tracking from there down below 15 to, I believe, 1485 on an intraday basis. At that point, this market genuinely gets some real support and traders move it back up. Now, interestingly enough, for those that follow candlesticks in the umbrella group, meaning hammer, hangman, shooting star, inverted hammer, the color is not critical. Color is not something you look at, whether or not it opens or closes lower on the week in this case, but rather what is indicative of this umbrella line is that body size, and we're certainly getting that. So the Japanese like to say you're hammering out a bottom, and this is the kind of longer term sign that I really wanted to see before moving back into silver. It's just been under so much pressure. I can tell you this, we most likely, I would say an 80% probability, will enter this market from the long side at the beginning of next week. It's definitively met the criteria that we're looking for, especially this hammer. We want to see if this hammer confirms. And of course, for the hammer to confirm, what we would see, and again, this is a weekly chart and we'll go off of our daily charts to actually get a signal or so, but what you want to see is a green candle that's of good body size, with a higher high and a higher low, something like this in terms of an illustration, and that would most definitely be signaling a pretty sizable breakout to the upside. So traders, the best that I can make of the precious metals this week is, first, gold continues to act lethargically, not reacting in traditional safe haven investment status, so to speak. But we have a shining star. The color of that star, of course, is a white silver. Silver has really been coming into limelight. And as I said, that is a market we will probably enter on Monday. In terms of the other markets that we are following, we talked a little bit on Friday of last week about crude oil. Crude oil closed nominally, I will call it nominally unchanged on the day. 52.81, still well below that $60 trigger point. And with the talks in Iran possibly coming to some sort of a conclusion, favorable conclusion, that would add oil to the market. We also have a supply issue. There's a lot of supply of oil, and we have the last issue within the oil market, fundamentally speaking, that is a slowdown in the economy in China, and of course they are such huge users of that commodity. So those three items, I believe, should and could continue to put pressure on crude oil prices next week. Now that's the fundamentals that are in play. In terms of the technicals, and we've been talking about that throughout this week, our sense was that as our current Elliott wave count looks at, we've got a absolute bear count in which we had our wave 1, our wave 2 here, this long wave 3 down, and it's our current belief that we're in some sort of a corrective wave 4. Corrective wave 4 typically will unfold as some sort of an A, B, C progression. If that's the case, we probably have seen our first, meaning our A right here, culminating at the top at around $61. Our B wave is typically anywhere between 50 and 75% that of the move that you saw in A. So we're looking at a spot in which we would see some support coming in on the high end right in this area, meaning approximately the 50% comes in at 52.58, roughly where we're closing at. But we could see it genuinely go as low as 47.90, call it, and that would be contingent on it moving to this lower end right in here. If that's the case, we would see our A, this being our B, taking us down to about a, as I said, a $48 price per barrel. And then from there, we would see our C. Our C would either be flatlined, which would come in at around 62, or a little bit higher. Our projection on this system says it could go $70 or higher. I'm not looking for the market to move anywhere near that because I think that the fundamentals at play are overriding the technicals. Fundamentals always rule the marketplace itself. Technicals are simply a way to distill, dissect, and understand that information as far as I'm concerned, but you have to take into consideration, most importantly, what moves this market, which is the fundamental factors at play. So I think you might see this market possibly move as high as 65, and all things being equal, from there, it would go back into some sort of a 5 count, meaning it would re-enter that bear market count in which we would see lower pricing, and the prices that we would get on that fifth wave would almost certainly have to take us to new lows or lows below this recent set at around $43 per barrel. Now, in terms of trending markets, we did have 2 active trades that we put on, not last week, but I believe 2 weeks ago. We'd have to look at the date. But we went long dollars, we went short euros. We saw this market move in our direction on a nice consistent basis throughout the beginning of this week. As you can see, this rise right in here. Long dollars, we got in at roughly 95.60, so right in this area here. And on euro dollars, which we'll talk about in a second, we got short at 111.65. I did send out a special trade alert for trending market subscribers. This went out yesterday evening, our evening here in Hawaii, because there was a potential deal on the boards between Greece and the Eurozone, and I felt that there was a high probability there would be an acceptance, and I also believe that that would really firm up the euro. The dollar, it would weaken it a bit. Of course, the dollar is a composite of much more than just the euro, but nonetheless, we got out of both trades, getting out yesterday at roughly 96.56, substantially higher than our close today at 95.77. So we were able to pick up a point on the trade, not as much as I had hoped for, but a profit nonetheless. In the euro dollar, much of the same. Euro dollar just flying today up almost a full percentage point. When we sent out our notification to exit the trade yesterday, fast market conditions trading between 111.08 and 111.14. It was all over the board. Looks like we got out at a better point than had we waited, because 111.51 is in essence where we've closed, very, very close to our entry point of 111.65. So I believe that we acted prudently and we did pull profits on both trades. As I said, not as much profits as I had hoped for, but profits nonetheless. Lastly, I do want to take a look at the equities markets. Equities markets, especially in the S&P, extremely volatile throughout the week, but we had a strong close on the day, 2070, 2050 being that major support level in the marketplace itself, closing up, as I said, about 30 points to the upside. When we look at our NASDAQ, that also the E-mini closing up 1.68%. And really the big mover, of course, out of all of this has been the Dow Jones Industrial Average, also moving up about 1.2% higher on the day, 200 points to close at 17,760. This has been Gary Wagner wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update review. Bye-bye.